Charles, thanks so much for taking the time today to just sort of speak to a new acquisition that was put into your portfolio, a recent new acquisition that was put into your portfolio, JP Morgan Chase. I know everybody's interested to find out what it is about JP Morgan that caught your eye and caught your attention and has given it the right to take up one of the 20 spots in your portfolio. So maybe I'll pass it over to you and we can get an update on why you included JP Morgan Chase into your portfolio.
Well, JP Morgan, we already have a couple of financial institution stocks in our portfolio. And why I'm looking at why I bought JP Morgan now is they're the largest U.S. bank by assets. They have $2.5 trillion in assets, and they're run by Jamie Dimon, who's proposed to be one of the best banker in the United States. They had a sell-off. The financials had a sell-off earlier in the month, and what I'm looking at now is that we're starting to see the 10-year bond rate move up. So the 10-year bond, as interest rates move up, we see the banks really benefit because of their net interest spreads. And that really means when you go and borrow money versus invest money. So in a rising interest rate market, banks do great. And the better banks do even better. Also considering that JP Morgan is an international bank and they do international business. So when we look at the metrics, the actual numbers, we see that, and we're always looking at margin of safety. So we always look at the economic book value as one of the most important aspects of investments. And we're looking at 1.4 in terms of the price to economic book value, which is very good and applicable now. But as we see the interest rates rising, that's basically going to go to the bottom line of JP Morgan. We also have a coordinated GDP movement basically around the world. So most countries and continents' GDPs are rising. So it's a very, very attractive environment for the financial institutions. So we decided that we would add this one, given the quality of the investment and the valuation.
So basically then what you're saying is that as interest rates rise, the bigger the bank, the more profit they can just basically drop onto the bottom line because of that extra spread that they're receiving.
Well, yes, it's not necessarily the bigger the bank, but the quality of the bank. And if you happen to be really big and really good, that's even better.
Right. Well, that's great. Well, that's super. So
as we see interest rates rising, interest rates rise for two reasons. One, because of the demand of money, and the other is because the government has decided to shut down the economy because it's overheated with inflation, and they push us into a recession. And that's going to happen eventually, and that's what will correct the market. But in the initial cycle, our interest rates now, or the U.S. interest rates now, are going up because of the demand for money. So companies are borrowing more money to expand. So that means the business is up, interest rates are up, and profits are up. That's the difference. There is a point where the government will start pushing up short-term rates to slow the economy down, and in which case these will not be attractive investments.
Right.
But we're not there yet.
Right. Great. Well, super. Well, thanks so much for giving us, a quick little insight into the company, what it is, what they do, really the size, the fact that their management is, in your opinion, one of the best in the business, and giving us some good rationale as to why this was now included in the portfolio.
There's a movement afoot to get Jamie Dimon to run for president of the United States.
Well, that would be an interesting move.
People would love that. That's the quality of guy he is.
Yeah, great. Well, listen, Charles, thanks so much for that, and we'll talk to you again real soon.
Okay.